Welcome to reneenergy.com, your renewable energy and sustainability platform. Hello, renewable energy enthusiasts. Welcome back to yet another enlightening episode brought to you by reneenergy.com. Today, we are not just scratching the surface, we are going on a deep, detailed dive into the fascinating world of green hydrogen production. You see, very few projects out there are willing to disclose their financial information, making it challenging to grasp the financial intricacies of this burgeoning field. That's why we've created an insightful project we're calling GreenHydro Oasis. By the end of this, you won't just know terms like capital expenditure or operational expenditure, you'll understand how these terms coalesce to paint a vivid financial portrait. And we'll do all this while calculating the elusive return on investment for green hydrogen projects. Let's get started. Disclaimer. Hang on. Before we get lost in the world of numbers and profits, let's clarify that everything we discuss today is for educational purposes. If you're thinking about investing in a hydrogen venture, consult a financial advisor, folks. The data and examples we're using are illustrative and educational. Meet GreenHydro Oasis, your virtual reality in green hydrogen economics. Alright, so let's get acquainted with GreenHydro Oasis, a hypothetical but awesomely detailed green hydrogen project. Why is it awesome? Because it's our sandbox for understanding the nitty-gritty of green hydrogen economics. So go ahead and make some space on your desk for that calculator or open up a new Excel sheet. Things are about to get numbers heavy. Decoding financial jargon, the metrics you must know. So here's the deal, you can't evaluate a project without knowing what to measure. And that's why we're breaking down these key metrics. 1. Capital expenditure, CAPEX. Think of this as the money you need to start the party, buying the electrolyzer units, building infrastructure, and all that jazz. 2. Operational expenditure, OPEX. This is your ongoing keeping the lights on cost, maintenance, salaries, and don't forget the electricity bill. 3. Total hydrogen produced. This is the actual juice, the amount of hydrogen you'll pump out, measured in kilograms or metric tons. 4. Hydrogen sale price. This is how much moolah you'll make per unit of that precious hydrogen. 5. Electrolyzer efficiency. This tells us how effectively you're turning electricity into hydrogen. These metrics are our guiding lights. They're going to help us get a handle on complex calculations like return on investment, net profit, and even the payback period. GreenHydro Oasis unveiled, a financial simulation like no other. Okay, let's make these metrics dance. We'll run them through some hypothetical scenarios. 1. Annual revenue. This is your total hydrogen output multiplied by its selling price. Can you hear the cash register ringing? 2. Net profit. Here's where we take the annual revenue and subtract the ongoing expenses, which is your operational expenditure. 3. Accumulated net profit. We roll over the net profit year after year to see how the project is doing over the long term. 4. Return on investment. This is where the rubber meets the road. We calculate it using your accumulated net profit, capital expenditure, and operational expenditure. 5. Payback period. Ever wondered how long it would take to get back all that you've invested? That's your payback period. Let's put this into an Excel sheet or your favorite financial software to visualize these dynamics. This is your own virtual simulation lab, folks. Pitfalls and challenges, navigating the risky waters. Investing in green hydrogen isn't without its complexities. There are a few key risks that you'll want to keep an eye on. 1. Fluctuating electricity prices. A change in electricity costs can significantly alter your operational expenditure, throwing your return on investment calculations off course. 2. Hydrogen demand. Producing a large quantity of hydrogen is great, but what if the market isn't ready to absorb it? Market demand can fluctuate and needs to be carefully assessed. Technological advancements. The pace of innovation is rapid. 3. The last thing you want is for your electrolyzer units to become obsolete shortly after investment, necessitating more capital expenditure. Understanding these risks and challenges will equip you with the tools you need to navigate any financial hurdles that come your way. Crunching the numbers, hypothetical financial calculations for GreenHydro Oasis. Are you ready to dive into the numbers? In this part of our discussion, we'll focus on the financial calculations for our example project, GreenHydro Oasis. We'll look at key financial metrics and walk through the calculations one by one. Key data for GreenHydro Oasis. Initial investment, capital expenditure, $1.5 billion. Annual operating costs, operational expenditure, $50 million. Total annual hydrogen production, 100,000 metric tons. Sale price for hydrogen, $3 per kilogram. Electrolyzer efficiency, 90%. Step 1. Calculate annual revenue. To calculate the annual revenue, we multiply the total annual hydrogen production by the sale price for hydrogen. Annual revenue equals 100,000 metric tons, multiplied by $3 per kilogram, equals $300 million. Step 2. Calculate net profit. Next, we'll find the net profit by subtracting the annual operating costs from the annual revenue. Net profit equals $300 million minus $50 million, equals $250 million. Step 3. Calculate return on investment, ROI. ROI is calculated by taking the net profit and dividing it by the sum of the initial investment and the annual operating costs. We then multiply this by 100 to get a percentage. ROI equals $250 million, divided by $1.5 billion plus $50 million, multiplied by 100, equals 16.7%. Step 4. Calculate payback period. Lastly, we'll calculate the payback period, which is the time it takes for the project to generate an amount of money equal to the cost of the investment. The payback period is the initial investment divided by the annual net profit. Payback period equals $1.5 billion divided by $250 million, equals 6 years. I hope you find this numerical analysis enlightening. It's crucial to grasp these calculations in order to understand the financial aspects of a green hydrogen project fully. Conclusion. You've just navigated through the complexities of green hydrogen project finances, and hopefully, you've found it not only insightful but also immensely actionable. We've gone from understanding key financial terms to dissecting the risks and challenges. We've then applied all this knowledge in a step-by-step calculation for our hypothetical GreenHydro Oasis project. Remember, understanding these financial metrics and calculations doesn't just make you an informed viewer but an empowered stakeholder in the green hydrogen future. If you've found this deep dive helpful, please don't forget to like, share, and subscribe to get more high-quality content from reneenergy.com's YouTube channel. Your understanding of green hydrogen economics should now be both deeper and more comprehensive, enabling you to actively participate in this transformative industry. Thank you for tuning in. Thank you for choosing reneenergy.com as your go-to source for all things renewable energy and sustainability. With our YouTube channel, we explore the latest developments and innovations in the field, including hydrogen fuel cells and the use of AI and machine learning to optimize energy consumption. If you're ready to take the next step towards a cleaner, more sustainable future, visit us at reneenergy.com and discover the many ways we can help you transition to renewable energy. Thank you for watching and subscribing. Stay up to date on all the latest news and insights by subscribing today.